Hi everyone, welcome back to another video. Today I'm going to be talking about stock terms. I'm just going to be giving you guys a quick little demonstration of what some of them mean. I just have a few. If you guys want a part 2 to this video with more terms, go ahead and comment that down below and I'll be sure to make a second video. So let's jump right into this. So the first one here we have is a CEF, or a closed-ended fund. A closed-ended fund is simply it's just there's only going to be, let's say, 10 million shares. So if I made a closed-end fund, I'd only ever be able to have 10 million shares, meaning I can't raise more capital by offering shares. That's really what that means. There's only ever 10 million shares. Once those 10 million shares are gone, they're just traded amongst investors. There are no more new shares coming out. That is what a CEF is. An ETF, or an exchange traded fund, is pretty much the exact same thing, except for the people in charge of the fund can change how many shares there are. So they can go ahead and add more shares, take shares off, raise funds. They can do all kinds of different things like that. That's what an exchange traded fund is. A REIT is what it's most commonly referred to as, but it's just a real estate investment trust. A real estate investment trust, simply put, is just typically a trust set up by someone or a group of people that invest in real estate, and people go ahead and have them publicly traded occasionally. So what that simply means is, let's say I own 10 properties and I want to go ahead and let other people in on that too. Then we can, the money I get from that, I then have to split. The nice thing about REITs is that they have to pay out, I think it's 90% of their profits to shareholders. So that's a nice thing about them, is they do pay out really good dividends, and that's why. Speaking of dividend, it's right here. I'll get to that in a minute or two. A PE ratio. A PE ratio is just the price to earnings ratio. So let's say we have a stock price of $10 and they're making $1. Then the PE ratio would be, well, I don't even know what that'd be off the top of my head, but that's how you decide what the PE ratio is. It's the price to earnings ratio. So I think it'd be 1 to 10, or 10 to 1. So the stock price is 10 to the earnings of that company, so 10 to 1. The next up is the forward PE ratio. So following that same train of thought, our stock price is 10. Right now we're doing $1 of earnings. In the future, we expect to make $2 of earnings. Then the forward PE should be lower because we're expecting to make more earnings. So that's what a forward PE is. A dividend is just the money that the stock decides to pay their shareholders. So when you own a stock, you're a shareholder. Shareholders sometimes do get dividends, especially from REITs, a lot of closed-ended funds, a lot of exchange traded funds. A lot of those pay dividends. The percentage is all over the place. There's some that pay out 2%. There's some that pay out 10%. There's not a lot to pay out higher than 10%. I don't know a lot to pay out 10. But that is what a dividend is. It's just you go ahead and receive money for owning that company. The next up is the market cap down here. A market cap is just the price of all the shares. So let's say the price is $10 for our shares per share. And the market cap would be $10 per share times however many shares there are. So if there is 10 shares, then there's market cap for that company would be $100. Typically, you'll see these, there's different levels, but there's low, mid, and high market caps. Low is typically somewhere in the million range. Mid is somewhere in the 100 million range. And high is pretty much everything over $1 billion. Honestly, most things are in the 100 million or closer to that high end. But yeah. So that's what a market cap is. It's just your however many shares there are times the stock price. That's your market cap. A 52-week high or low is simply what the stock price was in the last year. It's high and it's low. So the lowest it's been in the last year and the lowest it's been in the last year. Really easy, really simple. And the volume is just how many shares have traded throughout the day typically. So I go ahead and have my stock trading. Let's see how I want to explain this. So I own a share and I sell it. That'd be one volume. If I owned one share and I sold that share or bought that share, it would count as one volume. So if you buy 200 shares of a company, your value should go up by 200 because you bought them from someone else. It should go up by 200. So yeah, these are some simple terms. If you guys want a part 2, let me know. I'd be more than happy to do that. If you guys are confused on anything, go ahead and drop a comment below and I'll try to clear it up. But yeah, this is some very simple things. You'll see a lot of these terms when you're getting into the market. They're very common, and that's why I wanted to make this video. So I hope you guys enjoyed. Thanks for watching. Have a good one. Bye.